If you think you've seen everything in this market, think again, because right now something unthinkable is happening to silver, and most investors still haven't grasped the magnitude of what's unfolding before their eyes. This is not another minor blip. This is a seismic monetary event that could redefine wealth in the decade ahead. For years, silver has been treated like an afterthought. It's been ignored, dismissed, pushed aside. While attention chased overvalued stocks, speculative tech bubbles, and promises of easy money. And that neglect wasn't accidental. Silver was trapped, suppressed, held below where honest price discovery should have taken it. Markets have a way of correcting distortions, and when they do, they don't ask for permission. What we are witnessing right now is not just another rally, not just another short-term spike driven by headlines or hype. This is a historic breakout, and more importantly, it marks a fundamental shift in momentum that most people still don't understand. When silver spends years grinding sideways, frustrating investors, shaking out weak hands, that's not a sign of weakness. That's a sign of accumulation. That's what markets do before a major move. The longer the base, the bigger the breakout. And silver didn't just casually drift higher, it smashed through levels that had kept it for more than a decade. Neville's debt had acted like a concrete ceiling. When an asset breaks free from that kind of long-term resistance, it's not technical noise, it's the market screaming that the old price regime is over. Momentum matters because momentum reflects psychology. It reflects a change in belief. For years, the belief was that silver was dead money, that inflation was transitory, that central banks had everything under control, that fiat currencies were stable stores of value. Those beliefs are now collapsing in real time. And as they collapse, capital doesn't move gradually, it rushes. That's exactly what we're starting to see in silver. This breakout didn't happen in isolation, happening while government debt is exploding, while real interest rates remain deeply negative, and while central banks are trapped. They can't raise rates enough to fight inflation without detonating the debt bubble. They can't stop printing without crashing the economy. That leaves only one path forward: currency debasement, market. Understand this, even if politicians pretend otherwise, and silver, unlike paper assets, doesn't lie. What makes this moment so dangerous for those on the wrong side is that silver is a relatively small market. It doesn't take much new demand to overwhelm supply. When momentum shifts in a thin market, price moves aren't orderly, violent. That's why silver historically doesn't climb the stairs. It takes the elevator. Long periods of boredom are followed by sudden, breathtaking moves that leave people staring at the chart, wondering how it happened so fast. The breakout also signals something deeper. Silver is no longer just reacting to gold. It's starting to lead. Critical. Historically, when silver begins to outperform, it's a sign that the precious metals bull market is entering a more aggressive phase. It means fear is spreading beyond cautious hedging and into full-scale loss of confidence in paper money. Gold is about preservation. Silver is about acceleration. And acceleration is what catches markets off. Guard momentum traders, technical funds, and algorithmic systems don't care about narratives. They care about price. Once key levels break, they are forced to buy. That buying fuels more buying shorts are squeezed. Skepticism turns into panic, and suddenly the same people who ignored silver at half the price are desperate to own it at much higher levels. This isn't speculation. It's how every major historic breakout has unfolded. What makes this breakout especially significant is timing. It's happening at a moment when trust in institutions is eroding. When official inflation numbers don't match lived reality, when savers realize that even safe assets are guaranteeing losses in real terms, momentum isn't just coming from charts, it's coming from lived experience. People feel poorer, they feel squeezed, and they're looking for something real. Silver doesn't need optimism to rise, it thrives on doubt, and doubt is everywhere. The momentum shift tells us that the market is no longer willing to accept artificially low prices, demanding compensation for risk, monetary risk, currency risk, systemic risk. That demand is only just beginning. The real danger for most investors is not volatility. Volatility is the price of truth returning to the market. The real danger is standing on the sidelines waiting for a pullback that may never come. Because once momentum reaches a certain threshold, corrections become shallow and short-lived. The market doesn't give polite second chances. This breakout is not the end of the move. It's the beginning of recognition. Silver is waking up from a long and forced sleep. And when something is suppressed finally breaks free, the move doesn't stop at fair value. It overshoots, always does. The momentum shift tells us that the unthinkable is not just possible, it's already underway. Even after everything that has happened, even after the recent surge in attention and price movement, silver remains astonishingly undervalued. That statement alone sounds absurd to people who only look at its short-term charts or compare today's price to where silver was a few months ago. But valuation has nothing to do with recent price action. Valuation is about fundamentals, purchasing power, monetary reality, and historical context. And by every meaningful measure, silver is still cheap, dangerously cheap. To understand how undervalued silver really is, you have to stop thinking in nominal terms and start thinking in real ones. Just silver's previous highs for inflation, honestly, not using government-manipulated statistics, but real-world costs of living. And today's price isn't even close. Silver traded near 50 more than a decade ago, and a dollar has lost a massive portion of its purchasing power then, yet silver is still priced as if nothing has changed, as if trillions in new currency units were never created, as if deficits never exploded, as if debt never reached levels that can never be repaid, and that disconnect is the opportunity. Silver is one of the few assets that has not been repriced for the monetary insanity of the last 2 decades. Stocks, real estate, and even collectibles have all been inflated by cheap money. Silver hasn't. It has been left behind, not because it lacks value, but because its value exposes an uncomfortable truth. Paper wealth is fragile. Suppressing silver's price has been a way to preserve the illusion that currencies are stable and central banks are competent. But illusions don't last forever. Silver's undervaluation becomes even more obvious when you compare it to gold. The gold to silver ratio has been wildly distorted, reaching levels that make no sense historically or economically. For centuries, silver traded at a fraction of gold's price that reflected scarcity, utility, and monetary demand. Today, very implies that silver is either abundant and irrelevant, which it isn't, or that it is profoundly mispriced. Markets don't stay that distorted indefinitely. When they correct brutally. And this isn't just about history, it's about supply and demand. Right now, silver is consumed. It's not just stored away in vaults. It's used in electronics, solar panels, medical applications, and industrial processes that modern economies depend on. Much of that silver is never recovered. It's gone forever. At the same time, mining supply is constrained. New discoveries are rare. Extraction costs are rising. Silver is often mined as a byproduct, meaning production doesn't respond quickly. Price increases. That's a recipe for scarcity, yet the price reflects complacency. What's truly remarkable is how little capital it would take to reprice silver dramatically higher. This is a small market. A tiny reallocation from bonds, equities, or even gold would overwhelm available supply. That's why calling silver cheap isn't just descriptive, it's a warning. Cheap assets don't stay cheap. Once the crowd figures it out, they gap higher. They force repricing events that happen faster than people expect and higher than they imagine. The reason silver remains undervalued is psychological. It has exhausted investors. Years of manipulation, false breakouts, and crushing declines have trained people to doubt it. That doubt is the final ingredient before a major move. When nobody believes, when participation is minimal, when ownership is concentrated among the patient and informed, that's when value is greatest. Silver is also cheap because it has not yet been fully recognized as monetary insurance. People still trust paper promises. They still believe central banks can engineer soft landings. They still assume inflation can be controlled without consequences. As long as those beliefs persist, silver will appear undervalued. The moment those beliefs crack, and they already are, silver's price won't rise gradually. It will rip price violently to reflect reality. Misunderstand is that silver doesn't need optimism to justify higher prices. It needs honesty, honest accounting of debt, honest interest rates, honest inflation. If markets were honest, silver would not be anywhere near current levels. The only reason it is cheap is because honesty has been postponed, not avoided. Calling silver undervalued isn't a prediction, it's an observation. The market is pricing silver as if fiat currencies are sound, governments are disciplined, and debt can grow forever without consequence. None of that is true. When the market finally acknowledges that reality, silver won't just rise, it will be redefined. And when that happens, people won't say silver was obvious, they'll say it was unthinkable. The truth is it was simply ignored. Silver does not rise in a vacuum, responds to pressure. Pressure created by bad policy, reckless spending, and the slow erosion of confidence in paper money. The forces pushing silver higher today are not temporary, and they are not reversible without pain that policymakers are unwilling to tolerate. That's why silver is being fueled by macroeconomic realities that are far more powerful than any short-term narrative or central bank press conference. At the core of it all is debt. Government debt has grown beyond the point of manageability, not sustainability. Manageability. The numbers are so large they've lost meaning to the public, but markets understand them perfectly well. Debt can only be dealt with in 3 ways: default, austerity, or inflation. Default is politically impossible. Austerity is electorally suicidal, and that leaves inflation as the path of least resistance. Silver thrives in that environment because it represents something policymakers cannot create with a keystroke. Interest rates tell the same story even when central banks claim to be tight. Rates remain deeply negative in real terms, savers are punished, cash guarantees loss, bonds promise destruction of purchasing power. This is not a mistake, it's a policy choice. And when people finally accept that their savings are being sacrificed to prop up debtors and governments, they look for alternatives that cannot be diluted. Silver sits quietly in that role, waiting for recognition. Then there's inflation, not the sanitized version reported in official statistics, but the kind people experience in their daily lives: housing, food, energy, healthcare. The things people can avoid continue to rise. Inflation is not a temporary supply chain issue. It's the inevitable outcome of years of monetary excess. Once inflation becomes embedded, it doesn't politely disappear. It forces a repricing of everything, including money itself. Silver benefits because it is money that doesn't lie about its value. Currency debasement, another powerful driver. When every major economy is racing to the bottom at the same time, people are lulled into thinking there's no alternative. But debasement is still debasement, even when it's synchronized. Competitive devaluation doesn't eliminate risk, it amplifies it. In that kind of environment, holding currency becomes speculation, not safety. Silver doesn't compete with other currencies. It competes with the idea that paper promises are trustworthy. That's a competition. It is won many times throughout history. The industrial side of silver only adds fuel to the fire. Unlike gold, silver is both a monetary metal and an essential industrial input. Modern economies are becoming more silver intensive, not less. Electrification, renewable energy, digital infrastructure, all of it requires silver, and this demand is structural, not cyclical. It doesn't disappear in recessions. It accelerates with technological expansion. That means silver demand is being pulled from two directions at once: fear and necessity. At the same time, supply is constrained. Mining doesn't respond quickly to price signals, especially when silver is mined primarily as a byproduct. Years of underinvestment, rising costs, environmental regulations, and declining ore grades have tightened supply. Just as demand is rising, that imbalance doesn't resolve itself with better messaging from central banks. It resolves through higher prices. Another macro force often overlooked is the loss of credibility. Central banks have spent decades cultivating the image of control. That image is cracking. Forecasts are consistently wrong. Temporary becomes permanent. Contained becomes widespread once credibility is lost. It cannot be regained with words. Markets demand proof. Silver is proof. It doesn't require trust. It requires only acceptance. Geopolitical risk also plays a role. Fragmentation of global trade, weaponization of currencies, sanctions, and financial blockades have forced countries and individuals alike to reconsider what constitutes a reserve asset. When access to the financial system itself becomes a political tool, tangible assets gain importance. Silver doesn't depend on permission. It doesn't rely on counterparties. It simply exists. Perhaps the most important force of all is complacency breaking down. For years, people believed that the system would always work because it always had. That belief was the system's greatest asset. As that belief fades, so does tolerance for financial repression. Silver benefits not because people are optimistic, but because they are becoming realistic. These macroeconomic forces are not cyclical headwinds that reverse with the next policy meeting. They are structural consequences of decades of decisions that cannot be undone without collapse. Policymakers know this, which is why they continue down the same path while pretending it's temporary. Markets are beginning to see through that pretense. Silver is not rising because of hype. It is rising because the foundation beneath paper wealth is cracking. The forces fueling it are slow, powerful, relentless, and once they fully assert themselves, silver will not need an explanation. Its price will speak louder than any central bank ever could. One of the biggest mistakes people make when they look at silver is confusing volatility with risk. They see sharp moves, sudden pullbacks, violent rallies, and they assume danger. But volatility is not enemy. Misunderstanding is the real risk, and silver has never been its price swings. The real risk is believing that markets will give you a clean, comfortable entry point once reality becomes obvious. And silver has always been volatile because it reacts instantly to pressure that other markets absorb through distortion and manipulation. Stocks are cushioned by buybacks, government support, and endless liquidity. Bonds are propped up by central banks pretending that negative real yields are normal. Silver doesn't have that luxury. It trades in a smaller market with tighter supply. And when sentiment shifts, it moves fast. And without apology, that volatility scares people away at exactly the wrong time. They wait for confirmation, for stability, for reassurance. But by the time silver feels safe, it is no longer cheap. The most dangerous moment to own silver psychologically is also the most valuable financially when it is frustrating, erratic, and widely doubted. That's when the risk of not owning it is at its highest. Timing. Silver perfectly is impossible, and anyone who claims otherwise is selling you something. Silver does not move in neat cycles or predictable patterns. It surges, it stalls, it corrects violently, and then it explodes again. Trying to trade those moves usually results in being shaken out before the real move begins. The market specializes in punished precision. It rewards patience. What makes timing especially treacherous today is the illusion of control created by policy intervention. Investors have been conditioned to believe that central banks can smooth out cycles, contain crisis, and manage outcomes. That belief encourages people to wait, to assume there will be a warning before things change. History shows the opposite. Monetary shifts happen suddenly, and when they do, assets like silver were pricey before most people realize what's happening. Silver's volatility is also amplified by its dual role. It is both an industrial commodity and a monetary metal. That means it responds to economic data, monetary policy, inflation, expectations, and sometimes all at once. Short-term price action can look irrational because it reflects conflicting forces, but long-term direction is driven by fundamentals, not noise. Those fundamentals are not volatile. They are deteriorating steadily in favor of hard assets. The risk most people face is not buying silver too early. It's waiting too long because they're trying to avoid discomfort. Volatility creates discomfort. It challenges conviction. It forces people to confront the possibility that they might be right but early. Yet being early in silver is not the same as being wrong. The metal doesn't expire. It doesn't default. It doesn't go to zero. Time is not its enemy. Currency debasement is another overlooked aspect of risk, is liquidity during stress. When markets are calm, liquidity appears abundant. When stress hits, it vanishes. In moments of crisis, silver doesn't become more volatile, it becomes scarce. Premiums rise. Availability disappears. The price you see on a screen no longer reflects what it costs to acquire real metal. Those who waited for perfect timing often discover that the market has moved from price risk to access risk. Volatility also exposes false confidence. People believe they can emotionally handle large swings because they've never experienced a real monetary shift. They've lived in a world where every crisis was met with more stimulus and higher asset prices. Silver challenges that worldview. It doesn't promise comfort. It promises preservation, and preservation is rarely smooth. The irony is that the same volatility people fear is what creates silver's upside. If silver were stable, predictable, and widely owned, it wouldn't offer protection or opportunity. Its violent moves are signals, not loss. They indicate stress in the system, pressure building beneath the surface. Ignoring those signals because they are inconvenient doesn't make the risk disappear. It concentrates it. The most dangerous position today is believing you'll recognize the right moment when it arrives. Markets don't ring bells. They gap. They overshoot. Move. While people are still debating whether the move is real, silver's volatility ensures that the window for comfortable decisions is always smaller than people expect. The end risk is not measured by price fluctuations. It's measured by exposure to a system that depends on confidence no longer deserves. Silver's volatility is a reflection truth, trying to break through distortion. You can fear or you can understand it, but ignoring it doesn't make you safer. It just leaves you unprepared when timing stops being a choice and becomes a consequence. So I ask you this, in a world drowning in debt, where central banks pretend inflation is under control, where currencies arrow in, purchasing power by the day, will you be on the sidelines, or will you understand the unthinkable before it becomes obvious? Because make no mistake, this isn't just another market trend. This is a dream of silver's role in the global monetary order. History shows that when paper money weakens, tangible assets soar, and silver overlooked may soon define what it means to protect wealth in the 21st century. If you're ready for the unthinkable, then you're ready for what's